instead of having just one monolithic index fund that's managed by Xerberus, we give you everything that we would have if we would manage an index fund, and let you do it and give you the freedom to adjust it.
What's up, Ada Nation? Welcome to Dapp Central, your home for everything blockchain and crypto. My name's Fareed. As a part of today's video, we're diving into Xerberus and their brand new basket feature. As a part of the interview, I'll be sitting down with Simon and Noah from the team. Without any further ado, let me go ahead and bring them up. Good morning, Simon. How are you doing today?
Great to be here again. Thank you so much for having us on.
No, not a problem. The pleasure's mine. And last but not least, we've got Noah. Welcome aboard.
Hey, thanks for having us.
Always a pleasure. Always a pleasure. For anybody who's just seeing the both of you guys here on this channel, could you guys maybe give us a brief introduction as to who you are, and then maybe just quickly highlight what Xerberus is? And then we're going to jump into the main focus for today's video, which are the baskets, or the brand new tokens you guys have added as baskets through Xerberus.
Yeah, for sure. Xerberus is a risk rating protocol. So it is our purpose to provide risk ratings to help people understand in the ocean of the infinite amount of tokens that are being traded, which tokens are decent and which tokens may be a bit risky to invest in. So that's basically what we do. We want to be a lighthouse for all the people out there who want to, do their due diligence and learn about tokens. And yes, I'm one of the Xerberus co-founders. And Noah.
Yeah, so I'm another co-founder of Xerberus, and my background and my goal and my job here at Xerberus is really the creation of the model and the how we go about making these risk scores themselves. Yeah, that's about it. That's an intro.
Nice and short. I do appreciate that. Again, for anybody who missed our first interview, I think it's about an hour long. Make sure to jump back and check that out. We talk a little bit about the actual platform, some of the metrics, and then some of just the reasoning and logic behind how things have come to be. Now, since then, there's been a lot of development, obviously, on your guys' end. But for today's video, we're diving into one specific feature dubbed baskets. Do you guys mind explaining, number one, what this basket feature is? And then number two, how you guys see this being used in the ecosystem by your everyday ADA holder?
Yeah, I would love to. So the basket, what it basically allows you is to buy the Xerberus index. So what do we mean by that? We mean it's a basket that, let's say you want to invest 500 ADA or something like that. You can buy the basket and you get for the 500 ADA about 20 tokens, and the tokens are selected. They're weighted by their risk ratings, their available liquidity, and a few other variables. So we kind of like it's a pick of the strongest tokens in the ecosystem based on our quantitative modeling. And how this feature is sought out, or one of the applications really is if you want to DCA regularly and you want to be exposed to the entire Cardano ecosystem, there's a perfect thing how to use it. The other way how to use it is really, there's a lot of bets that you can make. You can, put all your money into one token, but what usually happens on average over time is you lose. And when you have a very diversified token portfolio, what you often have is that certain volatilities cancel each other out. So you have some tokens you lose, some tokens you win. And what you actually end up with is really this average exposure to the Cardano token ecosystem. And we'll talk about that in detail. But what we have found, and we'll talk about this in a moment, is that on average, doing this will probably be better than just holding ADA. And there's a lot of discussions in the ecosystem right now that we quote unquote need more liquidity. We need more ADA being deposited in the pools. And if you want to be part of that and have a good return on the market, and really be in the market, be exposed to it, I think the baskets are probably the best thing you could do on the market. And on average, it's very important to say it's on average, right? Because you can never assure edge cases, but on average, you will perform better than just holding ADA.
All right. So before we go any further, and before I turn it over to Noah to speak a little bit about, the time and sort of like the back testing in terms of research you guys have done, I want to just go ahead and set the record straight. I think there's always a lot of confusion when we're dealing with indexes in baskets. And I just want to confirm here, this is not an index token, which represents an underlying amount of tokens, but you're actually receiving 20 separate tokens with this purchase of a basket. Is that correct?
That is correct, and let me explain why we chose that. So there are two reasons why we chose that, right? We could have just set up an index, and then manage it for you. But so for one, it's not that easy from a legal perspective. So a lot of people jump out there and want to set up baskets. It is quite a challenge if you want to manage money for other people. And it's one thing to issue a token, have a token, but it's another thing to actually take money from retail people all over the world and put them into an index. We are in the background, we're definitely working on something like that, but it will take longer time because it is just legally very, very difficult. And honestly, I would be very careful when people try to sell you index funds after having spent many, many hours with lawyers and having talked to different jurisdictions. You really must be sure that these guys have a legal setup, because you don't want to end up with an index that then is being busted by a regulator and then you don't get your money back. And the second reason why we have chosen to come up with a basket is, once you have an index, all the funds are pooled, and you probably you can't do anything with it. And we said, okay, given the legal difficulties of actually having an index fund, how about we make it truly decentralized? So instead of saying Xerberus has your tokens and Xerberus manages it for you, what if we give you all the tools that you can do that in your own wallet, and thereby you have the power that everything that is in your index is truly in your custody, and you manage it. So by you managing it yourself, you have a bit more freedom when it comes to your risk reward tolerance. You can skew it a bit, and also what this is a huge advantage of Xerberus, but it's also sometimes a thing that we are criticized for, is what we do is purely quantitative. We only look at what we find on chain. We do not do due diligence on teams. We do not look on economic viability. We do not look into legal validity of certain projects. And it is purely quantitative, which has a huge advantage, as we see certain things that a lot of people probably wouldn't see when they do, when they look into the discords and the white papers. However, if, for example, there is something in the basket, in your personal index, that you want to have that you really don't believe in it, and you feel, or you might even feel about, you don't like the team, or you think it's morally bad, or you don't like meme coins, whatever it is, right? You have the power to just a little bit adjust it to your needs. So instead of having just one monolithical index fund that's managed by Xerberus, we give you everything that we would have if we would manage an index fund, and let you do it, and give you the freedom to adjust it and the power to, imagine you have to liquidate some assets because, well, it is just, you just need money, right? And you have now in your index position 20 tokens, and there's a few tokens you really, really believe in. Maybe it makes sense to liquidate those you're not 100% sure of. So it's really about empowering the user and creating a setup which is legally viable today, and where you stay in the power to in control of your assets.
Solid response there. I think, again, the legal framework has to be respected. The last thing we want to do is be investing in something, as you mentioned, only to find out that a year from now or 2 years from now that there's some sort of regulatory issues, therefore making you, unable to claim the underlying assets, etc. The second thing you mentioned there was the flexibility, right? So if you don't like a particular token that is included in the basket, you have the flexibility to go ahead and, get rid of that or sell that on the open market as you wish. Now, I believe we're going to turn things over back to Noah now. You guys have done some back testing, a little bit of research, and there's a really in-depth, I don't want to call it a white paper, but a research paper, I guess is what we could call it, right? Do you mind kind of breaking down what you guys were testing for as a part of this back testing, what you guys were looking for, and what you guys have found?
Yeah, so maybe I should start by saying this. The difference between an index fund and a basket buy really is the timing you buy it with, right? An index fund, in all essence, is just a fund that rebalances every day, right? The S&P 500 rebalances often every day, and people buy into the S&P 500, and it automatically rebalances behind the scenes, right? But what it's rebalancing is just a series of baskets, right? So these baskets and these index funds, we use them very, very interchangeably, because essentially when a user buys a basket, they're buying an instance of the index fund, and then they can exit that instance whenever they want. So yeah, we use these two words interchangeably. And your next question was, what do we look at? I think we talked a lot about that in our previous video. I don't really want to go into it because it'll be another hour or 2 hours. I'd recommend anybody watching this video, if you're more curious about it, feel free to jump. I hope you put it in the description so that they can jump in and watch that as well. But in short, right, we're looking at only on-chain data and on-chain metrics, and how this social network of these tokens interact and what they do that makes them have good or bad price action, right? So our back test, I think you had a graph of it earlier. Yeah. So this is a very, very confusing graph, right? What is a back test? How did we do our back test? And how did we come to the conclusions we came to, right? Like I said earlier, this index fund is just a series of baskets, right? So a basket, you can do two instances with it, right? You can buy a basket and you can sell a basket for the general. So for our back test, what we did is we took every single day and we looked at the basket of that day, and then we looked at how the returns of that basket would be on the consecutive days. So if I bought a basket on Sunday, how does the return of that basket look on Monday and on Tuesday and on Wednesday and on Thursday, right? And then I average these out, and the average return over all days, over all time for these baskets, essentially, basically, we can make an argument that you can say you could enter and exit these baskets randomly in some case, and you get an expected return of about 15%. Which is good. It's really good. It's a lot better than the underlying asset, which is ADA, and staking just ADA. And really, I think it's a bit of a testament to how good the Cardano ecosystem really is, right? When we're able to go to large hedge funds or large investors and say, hey, if you're literally looking to diversify into a particular ecosystem, diversify in this way, and you'll get better returns than just holding the underlying asset, right? There was a lot of people a while back, maybe 3 or 4 months ago, that were asking this very question: what's better, just holding ADA or holding these tokens? And with this backtest and with this index and these basket buys, we've proven that it's better to invest into the token ecosystem, right? So when these large hedge funds come in and these large investment firms come in, they're not just going to start holding ADA, but instead we can relocate that capital into the ecosystem itself and bring the whole ecosystem up as a whole together. Of course, this is only the first of many baskets we will present, and more index funds will come on as well. You can really think of this as almost a benchmark for our further testing and things like this. We didn't really have a benchmark or an idea of what an index fund looks like in crypto, because especially in Cardano, there just wasn't. So we had to create some sort of benchmark, some sort of minimal viable product that gives good returns, and this is this basket. So yeah, to reiterate, the back test, we've tested every single entry and exit that's possible with these baskets, and the average of all those entry and exits come out to a 15% return. Now, I hope I haven't lost you guys, because there's one more thing. These baskets, like I said earlier, I looked at every entry and every exit that's possible, right? But a true trader or a true index fund doesn't trade every single day that high frequency, right? I can't buy a basket today and then slowly sell it out into infinity. It doesn't really work. But if you use these baskets in a very particular way as an index fund, for example, entering 3 positions every 10 days, one position you enter for 100 days, one position you enter for 200 days, one position you enter for 300 days. You do this every 10 days, so kind of like a DCA. You get a much better return, a return of about 30%. And this is much closer to like how people would actually use it, right? Nobody's going to be sitting on their computer buying a basket today and then saying, okay, I'm going to partition off like minimal percentages to sell off the rest of the days to get that verified 15% that we show there. Typically, people will be entering and exiting a little bit slower, right? Once every 3 months, once every year, and that's what the index fund really wants. What we want to bring forth moving forward is more of these algorithmically when to exit and when to enter this basket. Yeah, I don't know if there's any questions or anything before
I think you did a really solid job explaining a little bit of the research and what you guys have found, right? And yeah, 15% might not sound like a huge, amount in crypto. I think people are used to, X's. You're talking 100%, 200%, 300%. But when you're looking at just being conservative, when you're looking at taking the slow and steady approach, something like a DCA makes sense, and something like investing in a broad range of assets also makes sense, because you hedge against the risk, right? And I think Simon talked a little bit about this earlier on. You run a lot of risk when you're only investing in 1 or 2 assets that you believe in. Yes, that also means that if there is upside, that you probably are going to fare better than somebody who's DCA'd. But what are the chances that, the 2 tokens or the 1 token that you've been investing in does what you're thinking versus what you've mentioned, right, which is a much more achievable 15 to 30% with a sort of simple strategy. You know, every month or every 2 months, jumping in there, making a purchase, and being able to really sit back, relax, and let everything sort of be on autopilot. You also touched on the fact that you guys are planning on adding more types of baskets. So I'm interested to see how those work. I assume you guys will have something, for example, like RWA baskets, DeFi basket, DEX baskets, etc. For now, of course, it's the top performing tokens. But I want to maybe just shift over next, take a look at the actual platform now. So for anybody who actually wants to test out the baskets themselves, please check out the links down below. It's available on the official Xerberus website, which is, let's see here, app.xerberus.io/basket. So they've got this brand new buy basket button here. And I want to maybe turn it back over to you guys. You guys are using the swap interface for Axo. Could you maybe highlight why Axo and how you guys see this going forward? And then I've got a follow-up question after that.
Yeah, I would love to. So Axo and we from Xerberus, we basically came together and joined forces on this, as we have a very particular need, right? Like we have quite a number of tokens that need to be sold in a single basket or being bought in a single basket. And Axo really, when we pitched it to them and showed them the back, they were immediately on. And I think it's really a pairing made in heaven in a way, because both Axo and Xerberus, we believe in professionalizing the market and in really providing these extremely advanced tools to people to make this financial market extremely efficient. And again, it's really a match made in heaven, as we both believe in the same things. And when you look at the basket, it's a very simple thing at the moment, right? It is like you get, give us 250 ADA and you get the tokens. But where this will lead, right? This is just the first step. And the idea is really that you can come on the Xerberus platform, set up a new wallet, plug it into the basket interface, and we read what tokens are in your wallet or how much ADA is in that, and then we recommend you both buys and sells. And the idea is really that now you're in full control. Is, let's say you move 100 ADA every month or 200 ADA every week into this wallet. You buy the basket, and then let's say every 2 weeks you sell the recommended assets back to get ADA back. So that you really kind of like rebalance what we talked about, rebalancing the S&P 500. That you rebalance your own wallet based on that to come closer to this ideal index. And this is really where this will lead, that you have this interface where you both have the sell recommendation and the buy recommendation from Xerberus. And we think that is really a very, very strong setup for people who really want to have a professional portfolio management, but still stay in control over it. And this is really where this will lead. And this is the first step. And we're incredibly grateful to Axo that they came out of the woodworks basically and told us, the guys, we can execute that what you need. And it's a testament to the Axo platform that there's such a strong partner out there who say, I want to buy 20 assets in a single transaction. They can say, yes, done. So we really, really appreciate the Axo team for the support and that they allow us to use their product for our service.
Solid. And I know you guys have an upcoming conversation with the Axo team. I'll leave the link to that down below as well. For the viewers, if this video is posted after that particular chat, do keep that in mind, that could be a replay of a conversation. But if you guys want to find out more about the collaboration and the partnership between the Xerberus team and the Axo team, then make sure to go ahead and check that out. Now, I want to ask a question, and it's not, obviously an easy question to answer, but what were the challenges, number one? And then where do you guys see this being improved moving forward in the future? How can you guys make this product even better?
What were the challenges? So this is the 7th risk model that we're on. We've gone through many iterations in the background, and we've been trying to bring out this type of product, right? But getting an algorithmic trading thing that kind of works all the time is really, really hard to do. So it's been a lot of research and development, a lot of hard work, a lot of long hours, coming to this point where we're able to actually have something that we're really proud of, and we're really saying, you know what, this is a good first step. This is a good first benchmark. Other challenges we had, I don't know, Simon, you want to talk about some of the, I guess you already talked about the legal challenges a little bit. There was some legal challenges around it. We couldn't really give out exactly what we want at the beginning because of these legal challenges. So we kind of did these baskets. Any other challenges?
I have one. I have one that is very surprising. So, Xerberus, sometimes you get criticized, right? Because people see a token that they really like and they don't understand why this token has not a particular good ranking. And this is a real challenge sometimes, because what Xerberus shows you in a way is the absolute brutal truth about on-chain activity of a token. And sometimes you have these projects which look very nice, have very smart people on them, and are very loved. But then you realize, really, when you look at the on-chain reality, that there's huge inequality in the token, there's extremely razor thin liquidity, and that there seems to be a disconnect from the opinion that maybe you see on Twitter and the reality that is on chain. And one other point that we created our own live stream about is our rug pulls. Exactly, we see Dana there, for example, and people often then be like, how dare you rate Dana a double C? And we're very well aware of Dana and the story. In fact, we wrote a over 20-page report on it, explaining exactly what went wrong with the token. But the hard truth is that a project like Dana raised $10 million, and they invested it in a way very smartly, because they onboarded on a lot of centralized exchanges. And these centralized exchanges where the token is still being moved around on, give them. Pardon me?
No, sorry. It carries it. It brings it. It allows Dana to have all of a sudden, because when we're looking at on-chain metrics, right, and these central exchanges are not washing, but they move the tokens around a lot in a big circle. A lot of people actually also still trade Dana. During the whole meme coin season about a year ago when Snake came out, Dana was a pretty strong meme coin back then. Again, increasing its ecosystem, and yeah, it's interesting when you see these things that are obvious scams or obvious rug pulls, still rolling in tons of money. For example, there's a rug pull on Ethereum called Squid Games, and the last time I checked, it was rolling in $500,000 of volume a day. That is more than the entire Cardano ecosystem, right? And it's one of the biggest rug pulls that ever existed. So the on-chain reality of what is a good token and what isn't a good token is different than what you perceive it as a human, as a person who wants the good to succeed. And it is a challenge, right? Because we ultimately our goal and the vision of Xerberus, right, is to be able to filter out things like Dana and filter out things like Cardax, CDX, or ADAX as well. And we're not quite there yet, right? We're still taking these baby steps to get there, and I think we're getting we're like each step is better than the last, and if we don't release it, if we don't show it, and if we don't talk about it, then we'll never be able to fix it or change it. So yeah, it's just. That was another definitely challenge. Sorry to take over, Simon.
No, it was wonderful. You said it perfectly. And I just want to build on that, what Noah just said. And there's this other aspect to it. And it's really heartbreaking, because it's like this one of these uncomfortable truths. It's like you have meme coins, right? And meme coins, they go very, very well, because, well, we're in crypto. We are very, very early in this financial systems, and the meme coins kind of know how to play the game, right? They know how to make a token that flows very well, if they have a fair launch, a fairly equal distribution, and people are highly committed on it, and they drive it through social media, and they have memes that everybody can understand. And then you have other projects that have huge ambitions, right? They build real infrastructure, they build like gigantic visions. But what you see in the end is that when it comes to one of our community members, investing 100 ADA, you do compete with a meme coin. And these meme coins sometimes have much less weight and baggage than, like your visionary token. And well, what we see on chain is that there's a lot of projects with huge visions who simply struggle to compete with meme coins, because the meme coin offering is so much clearer and so much more accessible, and thereby they are able to attract much stronger community networks than some of the visionary coins. And I think that is a real moment to contemplate that. When you mint a token, you have to ask yourself two things: A, can you compete with a meme coin? And B, what can you actually learn from meme coins? And I think, and we have helped some projects in the ecosystem also, and as one of the opinions that we have, like, stop pre-minting 90% of tokens and hold them on one wallet, because what happens is the network becomes incredibly unequal. There's incredible low liquidity compared to the entire token supply, and most of the time you end up not needing that, right? And what we see with these meme coins is that tokens which have very fair launch, fairly equal distributed, work much better, right? And when you think about Bitcoin, right, like, give tokens out for people who do the work, right? Like who run the mines, who run the nodes. Right? It's a much, much better system. And I think this is really something that we learn. And we're very sorry because the project we know who did that and kind of regret that they had such a large pre-mint. And to be clear, these pre-mints are punished in the model. We don't like to see them. We see that in the backtest tokens with these gigantic pre-mints do not tend to perform that very well. It's not always true, but
well, I mean, it's just an element of risk, right? Ultimately, at the end of the day, you have a supply of this financial asset that's so large and so bigger than what's being put on the market that any slight movement of this massive wallet can completely dump these markets, right? Like, for example, I don't want to call it names, right? But there's a token on our ecosystem that has something like 97% of its tokens still in one wallet, right? And this is because they have a 20-year emissions curve and then things like this is all fine. But what happens if that wallet gets hacked, or what happens if like worse comes to worse and there's no more access to this wallet anymore? First of all, you have an incredible price shock either way, right? If all of a sudden you're like, okay, I'm anticipating rewards for the next 20 years and this is what I'm going to be getting, and all of a sudden you can't get that anymore. All of a sudden the on-chain tokens is what there is, that will cause a price shock. Additionally, also, if somebody comes on there and has this wallet with 97% of the tokens, they can just sell 4% and already put the price into the minus, right? Technically, like go down to zero, because it's just so easy. And it's not the greatest thing ever to, yeah, I don't know. Maybe everybody just pre-minted because that was the Cardano ethos, right? I mean, Cardano pre-minted everything that they had as well. But it's always better to go on the path that's best for you and not to follow others. And that's what we think about pre-mints.
Yeah, absolutely. And I want to give one concrete example that we should not forget. The people who are the OGs will remember Flicto. At least that I was one of the guys who got racked on Flicto. I was buying Flicto the way down. So what happened for the people who don't, because I met the team back in the day, and the team was really, really, really nice, very visionary, very convinced in what they were doing. And so basically what happened back in the day with Flicto was basically one co-founder blackmailed the other and forced them to give them some of these treasury tokens, and they did that, and the guy went over and dumped it directly. This cannot happen if you don't have the tokens, right? Like, and you can even have a setup, right, where there's an open minting policy, which is funny. Open minting policies are not criticized, but actually it's a much better solution to this problem, whereby you have a system where, tokens can only be minted if, for example, if they're mined, if somebody's doing something for them, right? And then you have these moments where a hack cannot happen, and hacks is just the word, right? What happened with Flicto was social pressure, right? Where one blackmailed the other, right? But as long as these tokens are in the wallet, the probability that somebody can just take these tokens and throw them on the market and empty the liquidity pool in one or a few transactions is real. And now we ended up talking about the risk model, but not about the basket. But this is why it's one of the factors, and one of the big challenges that we have, right, is to find a good way to make a fair system that accommodates for all of them, and that punishes bad tokens just in a fair way.
Yeah, and also just to close on this whole situation here, think about for the everyday investor, right? For me and you who are going to these tokens, right? One of the first things you look at is total supply. If this total supply has absolutely no relation to how many tokens are being used in the system, all of a sudden you have to start tracking every single wallet to understand what is the total supply on chain, who's got what, and then if somebody changes, why did they change? How did they change? However, if you had this minting policy where you just looked on Cardano scan and it said this many tokens are minted, and then tomorrow you minted maybe another 20%, right? That would be an instant signal. You can say, okay, I know exactly that these tokens have moved. The supply has grown a little bit, and this is something I should be interested in, right? But if you have 20 million tokens and all of a sudden 200,000 go into the market, there's still 2 million on the website, and it doesn't really help. It helps nothing, basically. Yeah, we're just rambling about pre-mints now.
No, I think it's an interesting topic, and to just sort of tie it back to the original question, and just even meme coins. Let me actually pull this up here. I was very, very surprised to see AAA rating SNEC token.
SNEC number one. Huh?
Yeah, I mean, it really goes to prove your point. SNEC initially, when they came out, didn't really have an offering. They were just a meme coin, but they did exactly what you guys mentioned, which was to have one of the fairest launches that we've ever seen. And I think just that alone attracts more of a community than what some of these visionary projects, I think is the word that Simon used, tend to attract, right? Because again, it's sort of built for the community, by the community. And I think anytime that you can build trust, it always ends up playing out very well. And this is not just with meme tokens, but I just think in anything that you do, being honest, showing integrity, that goes a long way. And so to see that, at one point, I believe it was just World Mobile, which had a AAA rating, and now we've got MinSwap and SNEC, really goes to show your point there. I know for sure, again, SNEC had a really, really fair launch, and obviously their community has grown, and they're a meme coin, so it does go to show that you don't necessarily have to have the brightest idea. Not to say that the SNEC idea wasn't bright, but you don't necessarily have to have a world impacting idea in order for your token itself to have a really high risk score rating. So again, a testament to the fact that you guys aren't here picking and choosing. You guys just looking at the hardcore data, at the hardcore facts. Now let's tie the conversation back into the baskets. Of course, that's the main focus for today's video. I do want to give the both of you guys an opportunity to give me and my community here some closing thoughts. Again, what could we potentially see next? Anything that you guys want to share about the actual basket feature that we haven't had the opportunity to highlight as a part of today's video?
Yeah, I'll go first, and then Simon, you can take over after that. I think the closing thoughts I have is this index, this baskets that we're offering right now, is our benchmark, which means everything going forward from now will be compared against this. And our whole goal and our whole mission really is to self-iterate and to be better and better and better and better, right? So look at this basket as a kind of a benchmark for our risk scores, how much they're telling you about the market itself. If we're rating these baskets on our risk scores, and the return of those baskets is good, then that must also correlate to a good risk score, right? So it's a nice benchmark for us. Secondly, I think it's a really good testimony to the ecosystem itself, right? An investor coming into the ecosystem saying, "Oh, I'm just going to hold data because of all these bad coins." I was going to say all these shit coins, right? They'll just hold the underlying asset and stake it, right? Because that's the smarter thing to do. But with our baskets here, we're able to show them that they're not shit coins, that it's a really thriving ecosystem that's growing and expanding and better than holding the underlying asset. I think it's a really good testimony to the ecosystem, and I'm really, really excited for everybody to start really being able to have these tools and these opportunities to start bringing more capital into our ecosystem.
Nicely said. And before I turn it over to Simon, I know you guys are a very sort of research-based and fact-based team. I would love to see how these baskets perform, 5-6 months from now, and love to have you guys back on to also talk about new potential baskets that have come out since this particular conversation. So over to you, Simon. And just also one thing as well, could you maybe clarify, because I think this may have gotten lost in translation earlier, how the actual process works for rebalancing as you're giving us your closing thoughts? Do you guys take a look every 2 or 3 weeks to say, hey, these are the first 20 and these are going to change? Do these ever change? If so, how often, and how do you guys go about, figuring out what to remove and what to add in terms of performance over the course of the next couple of weeks, months, etc.?
So the baskets are constantly rebalancing. So they are based on the quote unquote underlying Xerberus index, which is updated once every day. So you cannot expect that the basket will look the same this week as next week, but this is because we constantly adjust to the changing on-chain reality behind these tokens. So if a token doesn't perform very well, it will very, very quickly leave the basket.
I'm sorry to interrupt you. Simon said there that we interact and change the basket. It's all algorithmic. So every single day we run the risk scores, we calculate the risk scores all on the same scales, and then they present themselves as what's the best and what's the worst. And then the basket is simply the top 20 of that. There's no sort of personal selection from us or some sort of filtering or anything like that. There's none. Go ahead, Simon.
Yeah. That's a really, really good point that you do mention there. So for the community, this team is not actually putting any of their opinion in any of this. It's all fact, research-based, and on-chain data. Back over to you, Simon, for your closing thoughts.
Yeah, you said it perfectly. It is absolutely, it's only data-driven, and we're very proud that we have this angle. And I think as closing thought, really, if you believe in the Cardano ecosystem, and if you want to become part of this token ecosystem that is built on top of Cardano, I think the Xerberus basket is the best offering in the market right now to actually get a decent exposure. And I just one very last thing we said about this 15%. Always keep in mind that these 15% is measured in ADA. So if ADA makes a 10x, you have 10x plus 15% more. So I don't think there could anything go wrong. I mean, as long as crypto keeps being cool, and as long as Cardano, keeps pushing it. But if you believe in a part of this ecosystem, I think it's the single best offering right now in the market to get exposure.
Also, Simon,
Nice.
what's that? What do they also say about past returns? What is that? What's the quote?
Past returns don't indicate future returns, but of course, it's true. It's also true. If something happens that, if it's a black swan event, right? Like if, let's say, I don't want to mention it, but let's say we have one of the major tokens, right? Let's say one of the dApps that has a AAA ranking gets hacked. Right. This is a black swan event. This is nothing that we look for. We don't do smart contract audits. We look for token distributions and token flow. So we are very, very narrow. But under the circumstances, nobody can predict that. So not even we.
As the crypto bros always say, not
Yeah.
financial advice. Right? So,
Not financial advice.
I do want to end off by quickly highlighting the Xercher NFTs. And again, this is not necessarily directly tied to the baskets themselves, but if you want to get full access to the Xerberus risk rating protocol, diving into some of the research that the team has put into this platform, which I've seen myself has been hours worth of content, hours worth of research, then make sure to pick up one of these NFTs. It allows for you to unlock and get access to the full suite of data that the team has put together. So that will do it here for today's video. Go ahead, Noah.
Yeah, I'm sorry. Simon, I don't know if you want to talk about the utility a little bit, but the utility for the NFT has kind of changed a little bit. We've been talking about decentralization and giving the people the power and all this type of things. The nodes themselves will become licenses to be able to run a Xerberus node to self-verify our score against ourselves, right? Ultimately, at the end of the day, me and Simon can always be corrupted at some point and then change some coefficients here or there and change the risk score. Nobody knows about it and it's all good. But if everybody's running the same calculation and we're all comparing it to each other, we can have a consistent risk score. So first, the NFTs are licensed to run and own a node. And secondly, they're also they give you a power to introduce Xerberus improvement protocols, right? I can't be the only data scientist who's working on this risk score. It can't just come from my own brain. It has to come from a community. And if somebody says, hey, I want to change something, I want to maybe add like a data point about liquidity tokens, for example, right? This NFT allows you the access to put this in a very structured manner that if voted by the whole community and our eventual token holders, it can be entered into the risk score, affecting the risk score later on. So yeah, there's a lot of new utility with the NFT and a lot of powerful utility with this NFT, and it's necessary for us to garner this community that allows for a decentralized decision-making protocol, which is the Xerberus risk rating protocol. I don't know, Simon, if I missed something.
I think you summed it up perfectly.
That's really interesting to hear, and I think that's the right decision for you guys to make, right? So number one, obviously giving more utility use case for the holder, but then number two, really showing you guys' commitment to openness, transparency, and improvement, right? As you mentioned, if anybody wants to potentially add things in the future, they can do that with the NFT, but they can also fact check you guys, right? So I think that's probably one of the biggest things in the space is security and making sure that protocols are doing what they say that they do. And it sounds like with this new approach and the new use cases for the NFTs, you guys will be doing just that. That'll bring us to the close here for today's video. Again, huge thank you to Noah and Simon for jumping in here. Again, all of the relevant links for today's interview will be left down below for you, the viewer watching at home. If you enjoyed today's video, if you just learned anything along the way as it relates to Axo, the baskets, or the Xerberus protocol, please make sure to drop that thumbs up. It really does make a difference here. If it's your first time stopping by and you do want more coverage with the biggest builders here in Cardano, consider subscribing. And last but not least, if you have any questions for myself, Simon, or Noah, then please make sure to go ahead and leave them down below. That said, and as always, we'll see you guys in the next video.